All right. Lesson 1.2, market structure. Who's involved in market structure? So we got exchanges like CME, ICE, and Eurex, which is just like a European. You really don't have to. I mean, if you're in the UK and watching this video, that'd be crazy. But yeah, Eurex, you can go in more depth. But CME is just like S&P, Nasdaq, Dow Jones, like just commodities and currencies and all that stuff. And then ICE is like energy, metals, like just international. So, and then clear housing, so it's just the middleman. Think of like wholesaling a house. You find a a buyer and a seller and you're in the middle. And you're getting a cut of what is that you're getting a cut of that exchange, but both of those people are still making profit, I think. Brokers, this is how you guys, so me, how you guys are gonna enter into the market, and it's futures brokers, so like platforms. You can research all of them, but I do explain it a little bit farther into the video with the brokers. Market makers and other traders. So market makers provide liquidity, which is buy and sell orders, and where you can actually execute trades. Um, Spectators, day traders. I mean, short term, just like what I'm doing and you guys are trying to do if you're watching this. Um, this you really don't have to worry about. But how does future? Yeah, so you choose. So this is how you guys are gonna like enter into the market. I know, like, I don't want to teach you guys this instantly. I want you guys to know what the stock market is like and what is happening with money when it goes in the stock market. So you choose a futures contract, and it's either the ES, oil, or gold, or NQ, any of those. And you follow and you just track price. Leverage and margin, I think I talked about this in the last video, but it's just the power behind trading. Uh, with leverage, you just like you put a certain amount in and you get a leverage. So I can show you guys real quick. Uh, so say I'm on my paper trade, so this isn't real or anything, but you see these leverage, the leverage, like it's just a whole thing. You can, it's super easy to just like to learn on your own. But say I want to restart my account, I have a balance of 5,000, but oh, not crypto, but say I usually just stick around a 10 to 1. Um, I recommend it too, but now I have 5K in my actual account, but with my margin, it's a lot more. So just I think I explained it longer or later or right here. But yeah, I mean you just basically it's just margin. Um so say you put like 500 bucks in. You don't have to have 5 or 50K to actually own ES or something for a contract. You only need $500 to open that contract because of your leverage. So, but entering trades, this is really important. I'd write this whole thing right here down. Um, you can place different orders. So we have a market order, which is buy/sell immediately at that current price, and I'll show you guys right here. So we got say we want to trade, so we got market, limit, and stop. And let me split screen so you guys can see both at the same time. So market order, you're gonna have this. You can sell immediately at current price or buy at a certain price. So say let's go to the 1 minute. I know this looks crazy, but once you learn it, it's chill. So once you do a market order, just say one contract, and we could do, so take profit 20, stop loss 10, and oh, I actually need a little bit more money in this account, but you guys get the concept basically. Pretty self-explanatory. You just buy exactly at that price. For limit orders, you buy at a specific price. So say right here, right, you want to buy or sell at, say you think in 20 minutes the market's going to go to 80. So go all the way up to 80, and it would have a buy or sell order there. So, I mean, I can go more in depth into it, but I feel like I don't need to. And then stop order. So you sell or buy once a certain price is reached. So, yep. I mean, if you guys want me to go more in depth, I definitely can, but I think it's pretty easy to understand. But this is also very important, like I noted here. Risk management. So stop loss orders is when it's automatically exit a trade if the price moves against you. So let's go back to the chart real quick. We can place a paper trade actually. So and we're gonna do market. So let's mark it out real quick. Perfect, it popped up. So we got fair value gap, plus a big fair value gap. So, but we do have two bearish fair value gaps here. Let's see, just look back. If you don't know what the market's doing, always look back. All right, so it tapped in there with liquidity. So took all liquidity down here. So I think buy. So we just got filled for a long position. So we go over here. This is a long position. It's right there. And we want, so this is your ticks. Say we want 20 ticks for 10 stop. Okay. And how to actually get, like, if you want to set and forget a trade, which I definitely recommend doing, just do your take profit to 250, stop loss to 125, and that you close out and you're chilling. So that's basically stop loss, take profit, and then position size is you want to risk 1 to 2% of your account. So just whatever number is right here, do 1 to 2% of that account size, and that's how you're gonna manage risk and whatever. So closing your position, exiting, yep. You can close all your positions before the market closes, but not overnight. And what that means is it's not 24/7. It closes at a certain time. So you can go up here, market open, all is well, market's open, but it'll close in 19 hours and 17 minutes. So in 19 hours and 17 minutes, market's closed for an hour. And you can't close positions overnight. So you don't want to do that. You're basically gambling at that point because you don't know what will happen with the market the next day. You're just gambling. So yep, if you make money, yeah, I mean, it's pretty easy. Like this trade I just put in, it almost hit my take profit. So this right here, it will automatically take that out. So bang, made 250 just like that in, let's see. So I got in right there. 1, 2.5, maybe 3 minutes. Pretty easy. Although, if you don't look at the market with these fair value gaps or anything like that, you're going to lose money in the market. So, it's not this easy. It's really not. I mean, I'm honestly, that's a bad example because I made it look super easy. Like I just pressed one button and I made 250. Don't get that idea because you'll lose all your money doing that. I mean, yeah, you'll get lucky sometimes, but most of the time you're gonna liquidate your account. So, closing your position, I went over this. Yep. So in trading, if it goes against you, your broker, which is how you get into the market, might force close your position just in case your margin levels run too low. Why day trade futures? No patterns. So like stocks, you don't need two to 200,000 to get a couple shares of a certain stock. High leverage, yep, you can have small capital and you can trade. 24-hour trading, so it's not 24/7, 24 hours. So 24 hours, we're already a couple hours in. It's probably 5, 6 hours, whatever. I'm not good in math. I'm not smart, but yep, 24 hours a day, except weekends. Deep liquidity, yeah, there's a lot of volume in the market at all times. The risk of futures trading, leverage can obviously take a lot of money off of you. Margin calls, if your account is too low, your broker may liquidate your positions. Volatility, prices, yep, I mean, I could definitely go in depth with these, but I don't want to be here for an hour, plus I still have to go to the gym, so. Final thoughts, just, this is kind of like a summary, but I have to do a little bit better with the summaries. But, few day trading can be highly profitable, obviously. You can make 250 in 2 minutes, but it requires a lot of discipline, strategy, and strong risk management. So, risk management is, I basically risked, I told the market, all right, say you had $125 and you gave the you basically set that $125 on fire and you just threw it away basically. You can't have any attachment to money when it comes to trading. You can lose $1,000 a day, but um, one second. All right. Yeah, you can lose $1,000 a day, but you can also make $1,000 a day, and it's just definitely like super risky if you don't know what you're doing. But if you're starting, go to a demo account. Super easy. Go on TradingView and make an account. It's free. You can buy like a basic like membership thing that's like $15 a month, and it just is updating the market a lot faster for you guys. So key players in the market. This is what everyone that's in the market basically. We have retail day traders, individuals, so it's like us. So these are people like me and you who trade contracts for short-term profits, do not hold positions overnight, rely on rely on analysis, price action, and strategies. They use leverage to basically borrowing money. Um, and you have a couple brokers, futures brokers, NinjaTrader is good, Trading Station, yep, and etc. I use TopStep, so if you guys just wanted to know that, I don't know. But prop firms, these are just you get. I go through a prop firm, so that which is TopStep. Let me turn my notifications off. All right. So these are just where you're gonna. It's like an evaluation. Tops like prop firms, you just pay a monthly subscription. You have to make a certain amount of profit. After that, you are basically funded, and you have to make everything that you make. Dang, dude, I'm getting blown up. But um, you can make if you have low capital. Definitely go to a prop firm. Just make sure you know what you're doing before you actually buy a prop firm. But market makers, so these provide liquidity, just constant buy and sell orders. They just it's just spreads throughout the market. Like every second they take trades. Um, hedge funds, yep, trade, yeah. It's just, I mean, they're just financial firms, trade big positions. Um, yep. I mean, you really don't need to know this, but it is good to just have that in the back of your mind. But high frequency traders are just algorithms, lightning speed, millisecond traders basically just have a ton of trades like every millisecond. Clear housing, clear houses, risk managers. This is where you're gonna get forced closed, like I was talking about earlier. Oh shit, voice crack, my bad. But brokers um, just provide like the trading platforms. Um, yep, yeah. Final thoughts. The day trading futures market is a battlefield where different players compete with different strategies. So you might have a different strategy than your buddy next door. Understanding who you're trading against helps you navigate the market better. So knowing all these, yes, it's not very like like it's not required to know all this stuff, but it is good because the more knowledge you have, the better you're gonna trade. So that's basically it. So yeah.